Hello, everybody. Welcome back. Back again with me and the paper, the 2021 O level business and accounting paper, paper 2, question number 5. This is the accounting part. Here we go. This is your favorite part, right? Well, say it. Say yes. Yes. Favorite part, accounting. Well, it's my favorite. Some, not the majority. Some say, sir, accounting එක තමයි අමාරු. Don't even think about it. Accounting is the easy part. Once you get your basics right, once you have an idea about the lessons, the layout of lessons, and how the lessons are, put into the questions, once you have an idea, it's nothing, right? Introduction to accounting, accounting equation, dual impact of transactions, double entries. All the basic lessons are done by me in DP Education. You can find the videos, you can find the sessions, the lessons. Watch them, learn from the beginning, have an idea about the basics of accounting. Then you can catch on. Right, question number 5, children. Question number 5. As I always tell you, I'll just give you again about part 2, accounting part, the structure of the layout of the questions. Part 2, accounting, has 3 questions. 3 questions. Out of the 3, you have to answer 2. You have to answer only 2. So it's choice time. It's choice time. You can choose. Like the business studies part, that also has 3, answer only 2. This also has 3 questions, answer only 2. Right? But I'm going to do all 3 questions. One question has 12 marks. Each question carries 12 marks. Okay? Not like business studies questions. Business studies questions, they carry 8 marks per question, each question. Accounting, 12 marks for each question. Let's get on with it. What is the main purpose of accounting? What is the main purpose of accounting? Main purpose. Is it to record the transactions in the books of accounts? Or is it to prepare the ledger accounts? Yeah? No. No. The main purpose of accounting is to provide, that's right, to provide the financial information, financial information of the business to whom? Providing the information of the business to whom? To the competitors, to the enemies of the business. Now, all the stakeholders, to whoever that needs the information, we have to provide the information. So, information of the business to the stakeholders, or you can say to the interested parties. That is the main purpose. To the interested parties. All right, second part. write the source document and the prime entry book. You have to write what? You have to write source document, then prime entry book separately for each of the following transactions occurred in a business. A. No, I said A. Not A. I said A. A. Question A. Purchasing a stock of goods of 50,000 in cash. Okay. Purchasing stock for cash. You purchase goods, bring in more goods into the business, pay cash. So which prime entry book should you record the cash outflow? Cash purchase. Purchases journal? No. Cash purchase. Children, cash book. First of all, you have to write the source document. So source document, then prime entry book. Prime book. Source doc and prime book. Okay. First transaction. I know it's not really necessary, but it's good if you can use a format like this. It gives you a better, organized way to answer such a question. Purchasing a stock of goods 50,000 in cash. You have to write the source document. Source document. Okay. This is for A. This is for B. Okay. Right, now it's easy for you and it's really neat and clean, the answer. Source document for A, purchasing a stock of goods 50,000 in cash. Purchasing means, as I told you, we bring in goods into the business. Cash going out, we pay in cash. Cash expense. What is the source document? What is the source document? The prime entry book, we know that is the cash book. Cash book is the prime entry book. Oops. This is A. This is A. Okay. Source document. What is the source document? I'll tell you the prime entry book. I already told you the prime entry book. Prime entry book, I already told you. This is the cash book. For transaction A, purchasing a stock in cash. That is the cash book. What is the source document for cash? Tell me. Cash outflow, cash payment. Paying voucher. Okay. Now B, transaction B. Purchasing furniture of 100,000 on credit for the use of the business. Purchasing furniture 100,000. This is something else, huh? This is not purchasing of stock. A was stock, but B is purchasing assets. Right? Then you have to think a little bit. You have to think a little bit now. Purchasing assets. Okay. All right. First you check whether the purchase is done on cash. First of all, purchasing furniture, is it done on cash? No, it's on credit. It's on credit. It's on credit. And it is for the use of the business, right? Then, purchasing on credit, no cash involvement. Yeah, no cash going out. It's a credit purchase. Credit purchases go to purchase journal. But credit purchases of goods, this is purchasing. The first one is purchasing stock, but the second, B, is not purchasing stock. It's purchasing a asset, non-current asset. Yeah, so although purchasing on credit, purchasing on credit thamai, but it's not purchasing on credit, purchasing goods on credit. It's a purchasing of asset. It doesn't go to the purchases journal. It goes to the general journal. Now we know the prime entry book. This is the general journal. But the transaction B, for the use of the business, you record in general journal. What is the source document? Relevant for this general journal. The journal voucher. That's right, journal voucher. All right. Okay. Yeah. A, B done. Next question. The total amount of assets and liabilities of Raju's business, 1st January 2022, given below. Total amount of assets and liabilities. Assets and liabilities. Okay, 1st January, which means, children, these are the opening balances. No doubt about that. 1st January, beginning of the month. Beginning of the month, if they have given balances, those are opening balances. Surprise? Motor vehicles, we have 250,000. Stock of goods, 140. Debtors, 20. Cash, 100. Liabilities, 30. Familiar? No, no familiar. Assets and liabilities. You should be familiar with this. You have 1, 2, 3, 4 assets and total liabilities separately. Let's mark them. Asset, 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 and only one item, the total of liabilities. Great, that's great. Following are how the transactions occurred in Raju's business during the month of January impacted on the accounting equation. This is what they say now. This is what they say. How the transactions in January month affected the accounting equation. Let's see. Here we go. We have this table. Given the transactions, effects of transactions on the equation. 5th January, we have this. 10th January, we have this. 14th, 20th, and 25th. Okay. What is required now? What is required now? Let's see. Write the transactions with the amounts occurred on 14th January. Wow, we have 1, 2, 3, 4 questions. First one, write the transaction with the amount occurred on 14th January. We're doing this one, and 14th January is this transaction. Okay, right. The amount. 14th January, children. Motor vehicle, there's no change. Stock of goods, there's no change. Debtors decrease. 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 Debtors decrease. Minus 7,000. Cash increase 7,000. No, nothing under equity, nothing under liabilities, nothing under creditors. Cash has increased 7,000. That means cash has coming in, cash has come into the business, but debtors decreased by 7,000. Same amount. What is the transaction? Debtors have paid us cash 7,000. That's what you should write. Okay, let's take a blank page, answer the questions. Yep, we have a blank right here. Now, first of all, children, we need to write the transaction with the amount. With the amount occurred on 14th January. I have underlined it, 14th January. And we figured out what is the transaction. 7,000 debtors decrease, 7,000 cash increase, which means debtors have paid us cash 7,000. We'll write that. A on top. Debtors have paid 7,000 in cash. In cash. Or you can write cash. O. Don't write both. Cash received from debtors rupees 7,000. Either way you can write. You can write this way, or you can write the second way. But the amount is important. Write with the amount. Okay. Next, B. They're asking us, what is the amount of equity as at 25th? What is the amount of equity as at 25th? 25th means the end of the month. End of the month, 25th January. Okay. As at this date, how much is the equity? Well, look at the equity column. It is here. Let's look at the equity column. It is right here. Right here. The problem is, children, we have equity this much going down or decreasing on 10th. Again, equity increasing, going up, increasing, going up by this much, 10,000, by 10,000 on 25th. So what? 10,000 decrease, 10,000 increase, it's the same thing. Now what I'm saying is 10,000 decrease and 10,000 increase, it doesn't make a difference. So it's 0. What? Come on, you know better than that. You know better than, you can do better than that. Huh? How to work it out? Guys, the question is asking what is the amount of equity? What is the amount of equity? As at end of the month, as at 25th. But what is the equity as at first? The beginning. You have to calculate the opening equity. Go back. Amount of assets and liabilities given as at 1st January. 1st January. See, that is the 1st January means the opening date. Opening date, you have assets and liabilities. How to calculate equity? Why am I asking these questions? You know, that's right. Assets minus liabilities equals equity. So get the total assets and subtract the liability, which is here. That's it. Okay. How much is the total assets? Get the total assets, children. Total assets. We have already marked. There's nothing to mark now. We have already marked the assets, right? Motor vehicle asset 250,000 plus stock 140. That becomes 250, 350, 390 plus 20. 390, 410 plus 100,000, 510,000. 510,000 minus or subtracted by this total liabilities. How much? 30. Then how much is the equity? How much is the equity? $510,000 minus 30. 510,000 minus 30. 480,000. That is your equity. 480. Okay. This is the opening equity. Opening equity. When you opened the business 1st of January, you had this much of assets minus liabilities and that much of equity, 480,000. Okay. Now what to do? Following are how transactions occurred in Raja's business during the month of January are impacted. No, not that. The question was somewhere here. No? Yeah. What is the amount of equity as at 25th January? 25th January is here. When you end your month, when we end this month, in the equity column, there is a minus 10,000 and plus 10,000, which means minus 10 plus 10 gets cut off. There is no difference. So opening equity is 480 480,000, like we calculated right here, 480,000. Then closing equity becomes the same, 480,000, because 480 minus 10, again plus 10, answer is the same, 480. Okay, so that is the answer to question number B. What is the amount of equity? Let's write the answer. B. Equity as at 25th January is 480,000. Don't forget rupees. All right. It's that simple. Okay. Then C. What is the amount of total current assets as at 25th? Again, 25th January means end of the month. They are asking about the amount of total current assets. Current assets, not total assets. Current assets. They're asking about current assets, not total assets. Okay. Current assets. Let's mark the current assets first. Take the current assets. Is this current? No, motor vehicle is not current. Is this current? Yes, this is current. Stock of goods. Is this current? Yes, this is current. Debtors, current. Is this current? Yes, this is current. Cash, it's a current asset. Now, go back to the opening balances. Motor vehicle is not current. This is current. Stock of goods. This is current. Debtors. And this is current. Cash balance. So it's so easy now. Take the total of current assets at the beginning. That means the 1st January. Stock of goods we have 140. Debtors we have 20. Okay, we have taken this, we have taken debtors, now we are taking cash balance 100. Take the total 260,000. 140 plus 100,000, 240 plus 20, 260,000. This is the current assets total. Current assets total 260. Now let's find out what are the differences, what are the changes that has occurred in this value. Yep. Okay. Right. Okay. Stock of goods, opening balance 140,000. Debtors 20,000. Cash 100,000. That's how we took. Yeah. Stock of goods 140. Debtors 20. Cash balance 100. In the stock of goods, there is a 9,000 increase. 140 plus 9, 149. Again, there is a 15 decrease. 149 here, 140 plus 9,000 plus 140 plus 9, 149, 149 minus 15,000. 149, 134 is the ending balance, closing balance of stock of goods. Now to debtors. We have debtors opening 20,000 minus 7, that becomes 20 minus 7 becomes 14,000. 14,000 plus 25. 25 plus 14. 39,000. 39,000. That is the closing balance of debtors. Then cash. Opening with 100,000 minus 10. 100,000 minus 10. 90,000 plus 7. 97,000. Again minus 8. 97,000 minus 8. 89,000. 89,000. Can you see these figures now? Can you see these figures, children? Can you? Stock of goods in this column, we have a closing balance of 134,000. Here we have 39,000 for debtors. Cash we have 89,000. Okay. Did we get the amounts right? Did we get the amounts right? Check your additions. I mean, recheck the calculations. Right. So now it's only a matter of taking the total of current assets closing balances, because that's what they're asking. What is the amount of total current assets? Total current assets as at 25th. That is the closing date, end of the month. Let's take, let's recheck and take the total 134. Stock 134. Stock 134. Debtors 20, 45, 38, 38, 38, right? 38 here, not 39, 38 here. Okay. $38,000. 38,000. That is 38,000 is the debtors. Then cash, we have 89,000. Cash 89,000. Yeah, 89,000. Now it's just a matter of taking the total. That's it. Total becomes how much? 134, 134, 234, 4, 14, 3. Let's take it, let's take it, let's take it. Total current assets. 0, 0, 0. $21, 2 remainder. $261 is the answer, right? Is the total current assets. Okay. Can write on the other side what is the total amount of current assets. C. Total current assets as at 25th is 261,000 rupees. Voila. Done. Is there another part? Yes, there's another part. That is D. We'll use red for D, huh? D part. Indicate how the following transaction occurred in Raju's business on 31st January, the very last date of the month. That is like a new transaction. Happened on 31st January. Impacted on the above accounting equation. You have to record here. Investing Raju's private motor vehicle 300,000 to his business. Private motor vehicle. Raju's private motor vehicle 300,000 invest into his business. So motor vehicles increase. How to do this? We'll do it right here, shall we? I mean, they're asking to indicate how the following transaction, that means this transaction, how this transaction occur, effect on the accounting equation here, which means, my dear students, we need to record it right here. I'll take some space and I will record it right here. Okay, then it's easy, right? Let's erase these workings, huh? Okay, done. Easy. Now let's put the date, 31st of January. Let's put the date here. 31st. Okay. I will record. I will do the impact, the effect. Show the effect right here under the same table, given table, huh? Right here. Investing Raju's private motor vehicle. So what? Motor vehicles increase. Let's use this box for motor vehicles. This box for motor vehicles, huh? Date here, 31st January. Motor vehicles increased by 300,000. 300,000. At the same time, equity capital increased by 300,000. This is the effect. Okay, that is the 31st transaction which occurred in Raju's business. How the transaction has affected the equation. Okay, done. We are done with the fourth part, right? The last part. Is it? No. This is the third part. This is the third Roman number. And the answers are here. And on this slide, answer for D, we did it under the table itself. So up to D we have done now. Fourth part. It says the sales transactions occurred in Narada's business. This guy is the owner. Who? Narada. Narada is the owner. Narada. Sales transactions. That is something you should, keep in mind. Okay, only sales. No other transactions. Only sales. Sales only. Yeah. Sales transactions occurred in Narada's wholesale business during the month of January 2022 are given below. Wholesale, Narada is a wholesaler. Narada wholesale. Okay. Here we are. 5th January 2022, selling a stock of goods to Chamara, 45,000 on credit. Chamarata badu vikullane. So, selling a stock of goods to Chamara on credit. Now, those are the important points. On credit. On credit. On credit. 14th January. Selling a stock of goods at 60,000 in cash. These are the important points. In cash. That is in cash. First one on credit. Nayatane vikullate. Yes. On credit. Second one in cash. Okay. In cash. Third one. 25th January. Selling a stock of goods to Nuan on credit again. On credit again. On credit. Again on credit. I almost missed the trade discount. There's a trade discount. Don't forget to deduct the discount. Otherwise, flush off your answers. Your final outcome will be wrong if you don't deduct a discount. This is the discount. Alright, baby, what is required? Following of Narada's business for the month of January 2022. Following of Narada's business. What are the followings? Sales journal, sales account, and the total amount of sales. Sales journal. We have to draw the correct format. Sales account, ledger account. This is the prime entry book. This is a prime book. Yeah. Prime. Come on. Don't take your time. I'm not taking your time. Just making it clear. Prime book. Sales account is a ledger account. This is a ledger. Okay. This is a ledger. Right. These things you should notice. Ledger account. Fine. Then there's another calculation, total amount of sales. There's another calculation, total amount of sales. Can be done without a fuzz. Let's do it in this manner. Let's take a blank. Here we have a blank. Draw the journal first. Draw the journal first, because that is the first question. Draw the journal first. Date column, invoice number column, description column, or the customer name column, ledger page column, then the amount column. Okay. All right. Now you draw the ledger account. The sales account is the ledger account. We'll draw the ledger account too. That is also same page, same slide. First, I'm going to draw the T account, the T format. That is the easy way. First, I'm going to draw the T format. This is the T format. Then I will divide the columns. Date column, description column, amount column. If you want, just a ledger page also can be drawn, but not very useful. We are not using it now. A very narrow column for ledger page and the amount. This is the center line. Right, okay. Name them. Sales, first Narada's business, no? Narada's business sales journal. Then sales account, under that, under the journal, sales account of Narada's business. That is the ledger account, okay? Sales account. Perfect. Okay, sales journal A, sales account B. This is the A part. This is the B part. All right. Remember, you have 4 marks, so you can take like 5 minutes. 5 minutes for this. You have a little more than 5, but don't use your entire time, the full time. You must like keep at least a bit of time at the end of the paper, after finishing the paper, to check the paper, right? So 4 marks. I will give you 5 minutes for this. Maximum 5, 5.5. All right. To be quicker. Now, sales transactions given in Narada's wholesale business. We have 1 credit sale. Okay. You know that in the sales journal of a business, only credit sales of goods are recorded. So take the credit sales to the sales journal. Did you get what I said now? Did you get what I said? In the sales journal of a business, only credit sales of goods are recorded, no cash sales. So take the credit sale. Number 1 is a credit sale, we have marked it. Number 2 is a cash. No cash sales in the sales journal. Don't take it. Number 3 is also a credit sales. Right. Take the number 1 transaction, 5th January, selling a stock of goods to Chamara, invoice number 520. So 5th Chamara, invoice number 520, 45,000. We didn't name the columns. The names should be as naming the columns: date, invoice number. amount in rupees. How you should, name the columns, the order of the columns. 5th January, invoice number 420, right? Chamara is the name, as I can remember. This one. 5th January, Chamara, 45,520. Invoice number is 520. 520. Chamara, 45,000. Okay. Next, we have recorded that. Done. Next is not a credit sale. Don't record it. It's a cash sale. This one, 25th January, invoice number 521. Let's put those two. 25th January, invoice number 521. Okay. The information. Now, the amount should be taken after deducting the discount. I told you not to forget the discount. This is the discount. 5% discount. Now, 100,000 is the amount into 5%. Yeah? 5,000. Answer is 5,000. So you should subtract 5,000 from 100,000. Then 100,000 minus 5,000, it is 95,000. So 25th January, to whom? Who is the customer? You're selling to whom? Chamara. Nuan. Nuan is the customer. Right? 25th January, Nuan. 100,000 is not the amount. That is not the amount. 100,000 into 5%. You took 5,000 as the answer. That is the discount. With the discount. 100,000 minus 5,000, 95,000. Nuan. 95,000. That is it. We already marked the credit sales. Only 2 credit sales were there. Then we can finalize the sales journal for the month of January. The month of January. 31st January, that is the date. No invoice number. Write the description. What? Credited. Total of sales credited to sales account. Credited to sales account. What is the total of sales? 95,000 plus 45,000. 95,000 plus 45,000. 140,000. That is the total sales credited to sales account. Now you have the sales account here. This is what? This is what should be taken to the sales account. Which side? Credited. Credited. I missed to credit side. You have the sales account here. So take this to the sales account. 140,000. 140,000. 31st of January you can write debtors as the description, because sales journal you have the customers. Customers means credit customers. We use debtors as a common name. Debtors 140,000. Yeah, you have to name the you have to name the columns in your account. I can't do everything for you. These simple things and debits and credits. All right, that's it. All right, now what about the cash sale? Cash sale, you have this transaction which we did not take to the journal. We did not take that to the journal. Now, selling a stock of goods at 60,000 rupees in cash. You don't record this in the journal, not in the sales journal, because it's a cash sale. You receive cash. But although you don't record it in the sales journal, you have to record it in the sales account, because sales account should have all the sales. Credit sales as well as cash sales. So you should take this cash sale to the sales account. 60,000. 20. What is the date? 14th. Selling a stock of goods 60,000 in cash. This number is there. Selling a stock of goods 60,000. 14th. Just put the date and credit 14th, and to the credit side as cash, description as cash 60,000. Is that all? Yep, we have taken all three sales transactions. Sales journal is done, sales account is done, but you have to balance the sales account. That's how you take the total amount of sales when you balance the sales account. Yeah. Let's go to the sales account and balance it. Debit side is blank because there is nothing in the debit side. It's a blank. Credit side, we'll take the addition. 140 plus 60, 200,000. Yeah, same 200,000 should be on the debit side. You know how to balance an account. Not balance, not doing a balance carried down to the next year or to the next counting period. You don't carry down the sales value or the incomes or expenses to the next year, because at the end of the year you prepare financial statements using these incomes. Sales is income. Profit or loss statement, you transfer 200,000. And that's it. Done. Sales account is done. What is the next question? Next question is total amount of sales. Total amount of sales we have already taken. That is the 200,000 which we got from the sales account. 200,000 that we got from the sales account. Rupees 200,000. Total amount of sales done. Yeah. sometimes profit or loss statement, or in some other, in your A levels, when you go to your A levels, they say income statement. It's the same thing. This 200,000 is the total sales in this business, Narda's business, with the credit sales plus cash sales for this period. All right, so this is the fifth question, and we are ending the fifth, finishing the fifth question of the 2021 Business and Accounting second paper. Children, fifth question is over, but the sixth question and seventh question we have to do. We're going to take the sixth question in another video and seventh question in a separate video, and we'll be done with this paper. Hoping to see you soon. As always, do your work. Work hard, play harder, but don't mix up the two. Thank you very much. See you soon.